Nariman Behravesh, who took like 8 weeks vacation this year. It was such a sleepy economy. With his 2012 outlook, the euro 130.13 erases its view. Nariman, when you look at what we just heard from John Frayer and the cacophony of the week, you go into the weekend, you go to Monday. Are you focused simply on America, or are you focused on Europe?
Well, we're focused on all over the world, but in particular Europe, because Europe still probably poses the biggest single threat to the global economy and to the U.S. economy. So it's all about Europe, at least for the next few months, if not the next couple of years. So, very much so.
The IHS framework is to do a center tendency forecast and then an optimistic view and a pessimistic view. Weight those for us right now. Are you tilting pessimistic?
Yeah, the predominant risks are on the downside. It's not just Europe, although that's the biggest risk. The other one is China. You know, can China engineer another soft landing? I would say right now we give about a 25% chance of a downside scenario, as you're saying, and probably about 15 on the upside, and then about 60 for that base case, that central scenario that you're referring to.
Here's Elarian in Foreign Policy Magazine, a lengthy essay. I urge you to take a look at it. Downward spiral, the temptation among politicians will be to avoid making active choices. It would reduce their future degrees of freedom due to an even narrower set of possibilities and erode their ability to influence outcomes. Dr. Behravesh, I love Dr. Elarian's idea of degrees of freedom. What are the degrees of freedom that our central bank has right now? How much wiggle room does the Fed have into next year?
Well, it's interesting. The wiggle room, as it were, of the Fed has actually increased in the last few months as the data on the U.S. have come in a little bit better. And so in that sense, it doesn't necessarily have to pull the trigger on, let's say, QE3 or anything dramatic yet, at least. So given that the economy is looking a little bit better, it does have more room to maneuver. So the Fed, in that sense, is very fortunate.
Nariman, I think this is the most important chart of the year. I haven't made that decision yet as we go to our New Year's special. Our national anxiety, and it is real personal disposable income or real disposable personal income, however you phrase it, and it's just simply rolled over. Do you look for that trend to continue, Nariman, where inflation is not elevated but is enough to wipe out any wage gains?
I think certainly in 2012 we're going to continue to see that kind of a flat trend in terms of inflation-adjusted disposable income. But I would expect by 2013-14 we could start to see some gains. But certainly for the next year, unfortunately, not a lot of improvement there.
I want to pin you down. What is the Nariman Behravesh forecast for 2012?
For the U.S. economy, we're saying 1.8% growth for the U.S. In 2012. It's not great. It's not horrible either. So it's sluggish, but certainly no double dip, which is the good news. No recession.
Charles Evans, a dissenter at the Fed, looking for us to get down to 7% unemployment. Bring up that headline. Fed can push accommodative policy. Keyword there, push, until 7% unemployment. We have not reached escape velocity as well. Nariman Behravesh with us, the perfect guy to talk to on this. How can they push accommodative policy more to please Mr. Evans?
Well, you're absolutely right, Tom, in the sense that I think the power of monetary policy is considerably diminished in this kind of an environment. So they can do more. It's like an insurance policy, if you will, but it's not going to be what's going to drive down the unemployment rate. What's going to drive down the unemployment rate is confidence on the part of businesses and consumers, for consumers to spend, for businesses to hire. So that's what's needed.
Something like you do, this from Credit Suisse, Nariman, is 3 unemployment scenarios. And what's scarier, folks, is the most optimistic one is that green line where we get back to Evans 7% out there in the vicinity of 14 or 15. Nariman, with your 1.8% call for 2012, what are we going to see per month on non-farm payrolls?
Well, probably somewhere between 125 and 150,000 jobs a month. But as you're saying, Tom, that's not going to be enough to really bring down the unemployment rate that aggressively. It'll come down, but very gradually.
What else should we know from your forecast? When you look at those great Excel spreadsheets that you do, what is the common series that sticks out the most to you?
Well, certainly in the developed world, not just the U.S., we're looking at very sluggish growth. In the case of Europe, we're actually penciling in a recession for Europe. The good news is the emerging world is going to continue to grow rapidly. So a lot of companies in the U.S., for example, are going to continue to look for growth opportunities in Asia, Latin America, places like that. So it's very much still this sort of two-speed world that we've been talking about for the last couple of years.
Here's a chart that looks remarkably like the equity chart that we talked to Adam Parker about earlier. It's log again, and you can see the depression in the lower left corner. This is just industrial production over 70, 80 years, and you can see how we've gone distressingly flat. Maybe we've exported some of that industrial production to other nations. Nariman, the linkage between industrial production and the equity markets, is it tenuous or is it genuine?
Well, I would say it's becoming more tenuous very simply because manufacturing and industrial production are not as representative of the U.S. economy, which is more service-based, it's more knowledge-based. What are the key areas of growth in the U.S.? Apple, or say Cisco. These are not part of the industrial production numbers. So from that perspective, it's a mismeasure of what's going on in the U.S. economies. U.S. economy is doing much better than the industrial production numbers would suggest.
Right. Nariman, thank you so much.